short-term trader in nature. So use a fast stochastics rather than a slow stochastics, and you'll capture better confirmations on trend changes and breakout moves. Now we have a couple patterns that we'll go over here: bullish and bearish convergence and divergence. First off, we're looking at lower lows with stochastics making higher lows. That's an indication that if we are making lower lows, shouldn't the market be closing closer to the lows rather than the highs as it is in this example? In fact, that's almost representation of a true hammer formation, is it not? And what do we see ensue? The market rallying. Here's a great, the British pound. It's based on a 15-minute. Notice that we see what a low here. Notice that if this is our primary low before the market rallied, and that's our low in a stochastics, notice we have a secondary low, but yet notice where the market closed. It closed back above the range of the primary low, number one. It closed way off the low, but look at the stochastics. If this market is truly bearish, after all, lower lows and lower highs means market's going down, right? Not necessarily. This is showing that there's actually hidden strength under the market. And therefore, also notice that our pivot point moving average values, they are not making lower lows. This is actually a higher value than over here. So it's hinting that the market is truly moving higher. Now these orange arrows indicate selling opportunities. The blue line represents support. Do we want to sell support? No. We want to look for buy signals. So as we see buy signals in the market, we want to take buy signals, and again, we have another doji. We have what? A high close doji, still telling you to stay with the momentum of the trade. So bullish convergence in stochastics when price makes a lower low and stochastics makes a higher low tells us that we want to look for buying opportunities in the market. Another trading pattern called bearish divergence, and it's used in identifying market tops, especially as we see weaker highs. In other words, here we have a tall green candle. Now that would be indicative of what? A benchmark candle, right? Except for after a market has been, it didn't meet our criteria or our set of rules. Remember, we're looking for, we talked about after a downtrend, when you see a tall green candle, that's showing us that the current flow of the market is now up. After a long rally and you get a benchmark, that indicates what? A potential exhaustion. And notice that we're at resistance, pivot point resistance line right here. Doji, low close doji, sell signal. We have a high, we have a secondary high over a primary high. Notice our stochastics is lower. Price is higher than the first peak. Stochastics is lower at the same plot in time. You see that? Therefore, we're identifying that this is probably a blow-off top. We're looking for sell signals. What type of sell signal would we look for? At pivot resistance, we find a doji. We look for a low close doji signal, close below our moving averages, crossover of the moving averages, gorgeous sell signal. Again, let's take a look at the stochastics. We see buy signals, we see sell signals, bullish divergence, high close dojis. Remember, I wanted to go over and talk about this, that sometimes we see the stochastics in the same day will give you either flat top or divergence patterns. I mean, if this is a higher high occurring here, we should have what? At least a higher high if this is truly a bullish market. We have resistance, we have a doji forming at resistance. That's bearish divergence. Why is that bearish divergence? Because our stochastics has made a look where our fuchsia colored is compared with prior highs. At this high juncture, fuchsia is up here, and we're just slightly lower. Subtle differences, but we have a flat top or a lower secondary high in our stochastics. But what the dead giveaway, friends, is you and I talked about before. Dojis form more often than not at pivot resistance. And so therefore, if we were going along this signal at support, we have a high close doji trigger. How would we manage that trade? We are in green mode, which means we're looking to go long, as our arrows indicate.